Trading price action trends. Brooks. Take away the indicators, the oscillators, and the moving average crossovers, and what is left on a chart is the thing they were all built to describe. Price itself. Brooks spent decades learning to read that raw record bar by bar, and this book is the most rigorous account of price action ever written for the ordinary trader. Core thesis. Brooks is a former eye surgeon who reinvented himself as a full-time index trader, and his method rests on one claim. Every bar on a chart tells a story about the contest between buyers and sellers, and a disciplined reader can pull genuine probabilistic information out of the bar sequence alone. No indicators are needed, because the bars are the source material every indicator merely smooths. In his reading, the market is always in one of three broad states. It is trending, it is stuck in a trading range, or it is transitioning between the two. The trader's whole job is to identify which state is in force, read the bars for confirmation, and take the trades that profit from the most probable continuation or reversal. And because price action is fractal, the same patterns repeat on the daily chart, the 5-minute chart, and the 1-minute chart, so the reading skill transfers across every time frame. Brooks never promises certainty. His entire framework is built on taking trades where the odds lean your way, and the reward justifies the risk, what he calls the trader's equation. Edges are small and fleeting, and the professional grinds them out one bar at a time. The always in direction. Brooks asks a strange and useful question. If you were forced, at every moment of the session, to hold a position in one direction or the other, which would you choose? At most moments, the honest answer is obvious, and that obvious answer is what he calls the always in direction. The always in direction usually declares itself after a strong directional spike, a bar or a cluster of bars where one side decisively wins the fight. From that point, the direction stays in force until the other side produces a spike of equal conviction. This turns the vague advice to trade with the trend into something operational. You are not guessing about the trend. You are reading the most recent decisive bar and assuming continuation until the market actually proves otherwise. Trend day or range day. Brooks places every session on a spectrum. At one end sits the runaway trend, where bar after bar closes near its extreme and pullbacks barely exist. At the other end sits the tight trading range, overlapping bars and indecision, where every push fails. Most days live somewhere between and drift along the spectrum as the session unfolds. The consequence is blunt. Your playbook must change with the day. On a strong trend day, you take only with trend entries, buy the shallow pullbacks, and refuse the temptation to fade. On a range day, you do the opposite, fading the extremes and treating every breakout with suspicion, because most of them will fail. The classic retail disaster is running the wrong playbook, forcing breakout trades on a chop day and getting cut to pieces, or fading a freight train trend and getting run over. This is also the red Osiris Capital Trading Desk makes with you at the open. Before the first bar prints, it has already mapped the overnight highs and lows and the previous day's levels, and as the opening drive develops, it grades the day for what it actually is, a genuine trend from the open or a range-bound chop, and weights every call that follows to match. So you spend the session leaning with the day instead of arguing with it. The closing price is the verdict. Of all the prices on a bar, Brooks treats the closing price as the most honest. A bull trend bar that finishes near its high tells you buyers were still paying up at the final moment. A doji, where the open and the closing price sit almost together, tells you neither side could win the argument. That closing price is the bar's verdict on the contest, and it carries more information than any flicker that happened along the way. The discipline that follows is simple and surprisingly hard. Wait for the bar to close before acting on it. The half-formed pattern that looks so urgent in the middle of a bar frequently looks completely different once the bar finishes, and entering on the unfinished picture is one of the most common and most fixable amateur errors. Osiris Desk is built around the same respect for the closing price. It reads the market bar by bar and firms its coaching on the finished bar, rather than the twitch inside it. So what you hear stands on the bar's actual verdict, and not on a move that may have evaporated by the time the bar completes. The anatomy of an entry. Brooks breaks a proper entry into 3 parts, and the structure imposes a discipline most traders have never had. First comes the setup, the broader context, a pullback in a trend or a test of a meaningful level. Next comes the signal bar, the specific bar that grants permission, typically closing back in the direction of the trend and showing that the right side has reasserted itself. Last comes the entry bar, where an order placed just beyond the signal bar's extreme is triggered by the market itself moving through it. The beauty of the sequence is what it forbids. You cannot enter on a hunch or on hope, or because something looks about to happen. The market has to confirm the idea by trading through your level. And the protective stop sits just beyond the signal bar on the other side, so the cost of being wrong is defined by structure rather than by pain. A tight, clean signal bar gives a cheap trade. A huge, sloppy one warns you the trade is expensive and probably worth skipping. Breakouts and the trap of chasing. Brooks's most counterintuitive finding is about breakouts. Most of them fail. The bar that punches through a level sets off a rush of entries, and more often than not the move stalls and reverses, taking the chasers out at a loss. The trader who buys every break spends the year paying for the few that work with the many that do not. His alternative is patience. Let the breakout happen without you and wait for the pullback. If the break was real, price will pull back, hold and resume. And that resumption is a far better trade, entered with proof instead of adrenaline. The market showed its hand twice before you paid. The urge to chase is not a small thing, and it is one of the recurring leaks Osiris desk tracks in a trader's record. When a fresh entry starts to look like a chase, the same market, moments after the break, no pullback taken, it says so while there is still time to wait for the cleaner second entry. Pullbacks come in two legs. A meaningful pullback inside a trend usually develops in two legs rather than one. The first leg falls, a small pause forms, and a second leg falls further before the trend resumes. The trader who jumps in at the first pause is often stopped out by the second leg, while the trader who knows the structure waits for it to complete and enters at a better price with better evidence. Once the trend resumes, Brooks expects the next leg to travel roughly as far as the one before it, the measured move, which gives a working estimate for targets. None of this is mechanical certainty, but it changes the trader's whole posture. Instead of panicking at every adverse tick, you expect the pullback to take a recognizable shape, and you act only when the shape completes. Reading strength and weakness. Brooks catalogues the small signals that separate a healthy trend from a dying one. Strong trends print bar after bar closing near the extreme, shallow pullbacks that fail to break prior swings, and an absence of large counter-trend bars. Weakening trends show the opposite face, deeper pullbacks, doji clusters at the highs, big bars against the move, and breakouts to new highs that immediately fail. The value of this reading lies in trade management. Long in a strong trend, you can hold with confidence, add on pullbacks, and ignore most of the noise. Long in a deteriorating one, you tighten the stop, bank profits sooner, and start preparing for the day the structure genuinely breaks. The signals are individually tiny, but stacked together they paint a picture more reliable than any indicator built from them. When Osiris desk grades a finished trade, this reading gets its own axis. The context of the day is scored separately from the entry and the exit, and a flawless entry taken against the character of the session is marked down for exactly the mismatch Brooks describes, because the same pattern in the wrong regime is a different trade. The trader's equation. Underneath every pattern in the book sits one piece of arithmetic. The chance of winning, multiplied by what you make when you win, has to comfortably exceed the chance of losing multiplied by what you lose. Brooks calls it the trader's equation, and it is the quiet filter behind every setup he teaches. The uncomfortable truth he keeps returning to is that professional edges are modest. A setup that works 6 times in 10 with a reward 1.5 times the risk is a perfectly good professional trade, and expecting much better is how traders talk themselves out of good entries while hunting for perfect ones. There is no holy grail. What exists is the steady stacking of small, real advantages across hundreds of trades, protected by discipline from the errors that would spend them. Bottom line. This book gives a trader something almost nothing else does: a vocabulary for every single bar on the chart, and a structural discipline for acting on it. The always-in read, the respect for the closing price, the 3-part entry, the 2-legged pullback, and the refusal to chase are the craft skills that turn chart watching into professional reading. It is dense, it is demanding, and it repays every hour spent inside it. Truths like these are what the professionals agree on, long after the amateurs have stopped listening for them. Osiris Desk is where that agreement becomes daily discipline, an advanced platform for trader development and disciplined trade management, and the flagship of Osiris Capital. So none of it stays abstract, because Osiris Desk actually studies this book the way it studies the market itself. It reads the session bar by bar as Brooks taught, grades the day before it grades the trade, and waits for the close before it speaks. Until reading price like a professional is simply how you trade.